Welcome to the Mads Journal. This is my trading journal based on my trading perspectives, trading experiences, and yeah, you are free to have your own opinion, but we will not go through that opinion. We don't care. You know what I'm saying? So, in this video, I want to talk about the novice. How does the novice achieve their goal? How do you curate something that's successful as someone who's just new? Now, a lot of traders, because of the time span that we're in and how technology has evolved, in terms of the trading space, it has evolved in front of our eyes. So it's a specific type of generation that's trading, and they have this perception that they're the only ones that are trading, that people run around my age and slightly older, slightly younger. Trading is not only for you, trading is for everyone. Even the person who's 90 years old trying to make retirement funds for their kids, they can trade. So your perspective is not the only one. Your feelings don't matter. That's why I say don't take it too personal. Now, again, I'm talking to myself. This is not an attack on anyone. This is my journal based on my perspective, based on what I need right now. Now, the good thing about time in life is that everything resonates when it should and where it should. Whenever you come across something, even if you didn't want to come across it, it will resonate with you as it should. So, the novice, this is for everyone, for myself. If I was a novice, what do they need to focus on? Number one is understand. In trading, you're trying to make money. But in order to make money, you need to understand how to make money. And there's a skill. You need to acquire a skill. But what types of skills and how do you acquire those skills? The first one is how you interact with the market. But we're going to first explain it from a perspective of context. The market has consistent structure. There's three types of structures that always form as a combination of each other forever, that have been forming forever. There are three. But the problem with this, the combinations of these three patterns or these structures of the market change every day. The situation, the initiation of the signal, where it's derived from, the context entirely changes per day. But at the end of the day, it's still structure. You know what I'm saying? It's still structure. So you need to understand that the market is based on context, and the context changes every day, but the structure remains the same. Your job is to utilize a strategy that allows you to enter the market based on whatever context it's being put out there. Now, you could choose from a strategy, or you could just be a context-based trader. Context-based trader is that you understand everything that happens. If the market is buying, you understand this is 50-50. I'm not attached to the signal. I'm attached to the money I make and the money I lose. I should make sure upon every signal I don't lose too much, but I should try to maximize as much profit, because since they're random, some signals are better than others. Since they're random, some outcomes are better than others. Because context again, if this signal appears midday, it's a better signal than if it appears in the morning, like 6 a.m. Why? Because there's more activity from 6 until the end of the day than there is activity from 12 until the end of the day. Again, the market reflects economy. Yeah, the economy is a bit rigged, but it represents real-time economy. It might be rigged, but in real time, what needs to be presented is presented, should be presented. So as much as we know the market and we know the market is going to present itself, the market itself knows as much as right now. We also know as much as right now. Again, there's only a few structures, so don't be too fearful about, okay, since the market only knows right now, what if it just moves like that? That's what we call a sideways market, and it happens based on real time, not I found a sideways market, and this is how it works. Now, in real time, it means you lost multiple trades because the market went nowhere. And that means you need to lay off. That's a structure in its own. But to come to the market and say, this is a consolidation and you lose money here, there's no such thing. Because again, the market can be trapped between 2 points and it be here on maybe on the 6th week. You trade there, I trade there. I take a buy, you take a buy. And most traders would assume that it would sell because it's at resistance. Now the market buys because the market is 50-50. That was a structure that was created based on real time, based on the traders that were participating at that time. We chose to not participate. Not participating is one of the best skills in trading you could learn. So you are allowed not to participate in trading. You're allowed to say, you know what, I'm not taking the shot, which is another thing that we don't talk about in the trading space, which is not taking trades is beneficial. But you need to understand why you're not taking trades. You cannot just say, I'm not taking trades for not taking trades sake. You know what I'm saying? Because there's ring rust. You'll come back in the market after not taking trades for not taking trades sake. And the market will take your money. Every loss is costly. So you need attention, focus, responsibility, accountability. Those things you need to have in the market. Because you find the context there, but how your money moves is based on you. If I find a signal at 12 p.m. compared if I find a signal at 6 a.m., it's better to leverage more at 12 p.m. It's good to trade at 6 p.m. because you want to be upon multiple signals, but in terms of what more can the market do from 12 until midnight. So I look at it from that perspective. You can even look at it vice versa. It doesn't matter. But main thing is understand context. And how do you improve this? You choose one strategy. And that one strategy, you understand its entry, you understand its loss, understand the objectives around that strategy. How does it lose? How does it win? Under what conditions? Again, they'll tell you, put out a trend line, let it touch three diagonal lines going to a downside or 3. That's not viable. The market didn't move because of those touches. Those touches are based on mechanical points. You found 3 mechanical points that you assume will create a market reaction, but the market did not move because of that. There are many channels that show, I don't know, there are no channels that actually explain tech framework besides these quant traders that are flexing on all retail traders. This reminds me of a debate I had with a quant trader last year. Here's the thing. You being in the market, not even in the market, you going to school for 139 years and not even taking a single trade does not make you a great trader. You know what I'm saying? The traders who never went to school, they take trades every day. They're beasts. You know what I'm saying? What I'm trying to say is a trader who takes trades, who executes in the market and understands that the market is based on reaction and how well you react to what you receive will beat any trader. Schooled, disciplined, I don't care. Activity creates results in the market. Activity could be trading even once a week, but you cannot trade once a week if you don't understand the market. People think funding is the root. No. As much as I'm hating on quant traders, they go to school for a reason. They're not stupid. They're not stupid for going to school. But they are stupid for undermining traders who have activity in the market because they went to school. What can I say? Real-time interaction consistently done is school itself. A surgeon that goes to school for 12 years and a surgeon that was performing surgery for 12 years are 2 different people. You know what I'm saying? The one who was performing the surgery for 12 years doesn't even need the book. Every patient is context. Every patient is the book. He's the answer. So it's basically like that. And I just wanted to remove that stigma, because right now quant traders are coming out pretending like they make bank in the market, while only a handful get hired, only a handful get access to those resources, and only a handful have the guts to take trades. Being a trader is it's not just you wake up, you let your balls hang and then you go take trades. This market has existed more than 150 years. And it existed before quant trading existed. You know what I'm saying? Derived by numbers, not physics. I was going through this, I don't know, documentary. This doctor from the 1900s. The greatest mentors are dead. He's like, physics and math are two different things. And I'm talking as someone who did physics and maths. Now, I did this in high school. I didn't study physics and maths to be a great trader. I just believe that I'm a great trader, and I'll do whatever it takes to be the best. You know what I'm saying? But he says they're not the same thing. One could be, beneficial for the other, but it's not the same thing. One calculates abstract, one calculates facts. You know what I'm saying? Physics calculates facts. Yeah, physics calculates facts. If I drop this, the gravitational force does not change. You know what I'm saying? That's fact. But, laws of inertia and all that. In math, me and you can have different formulas and get the same answer. Because again, sometimes the formula is there, sometimes the formula is the person. So I would say in math, we do calculate abstract, because math calculates time. I know people want to say, no, physics calculates time. I mean, the clock. Time is an abstract fact that we can actually measure in real time. It's abstract, but we can also measure. Okay, maybe he was wrong, maybe he was right. I don't know. All I'm saying is, fuck them quant traders. That's all I'm saying. They are retail gods here. All the market wizards are retail traders. They're not quants. These quants get paid because they're at work. They don't get paid because they're as good as you. You know what I'm saying? You get paid because you choose the risk, you choose the skill, you choose what you want. It all takes time. Do not be undermined by people that, downplay the amount of time you've put in. Now, I know I've derailed from the point, but again, now context again and things that resonate with you. The time you put in is not cap. It's not fake. You had to put in that time. The market had to change you. You had to become the person that's required to be successful. You're just fighting with those demons right now because you just don't want to believe that you are their trader right now. And you shouldn't be told what's successful, what's not successful. You should be the one making the moves. And I stand on what I say. Because whatever market condition changes, when I talk about condition, I'm not talking about support resistance. I'm talking about floating peg and pure manipulation by, the cultists. I don't wanna sound crazy, but this quant trader, when I was debating him, he was on some, we control the economy because we're on some shit. I don't care. Here's the thing. No one knows more than right now. No one will ever know more than right now. Regardless of how much you plan, tomorrow is not certain. That's why I say God is reality. As much as there's these conspiracies of who runs the world and what runs the world, we see that and this. They only know as much as right now. Everything is just a product of plan and strategy and structure. Just like in trading, everything is a product of plan, strategy, and structure. We understand that the now will change, but the parameters that I've put around the now will constrict, the result into my favor. So that's the same thing you do in the market. You understand the now, and you put out parameters to constrict the market into something positive, something manageable. Now, trading has two sides. There's the progressive side, which is making profit, and the loss side, which is protecting your account. When you lose, you need to lose in a way where you protect your account. When you lose, you need to lose in a way where you understand where the market is going. Usually you put up trades where the entire structure of the market is invalidated. Now, what do I mean by condition? Here's the thing. The market is going to hit 360. That's what I believe. I believe in the future, 30 years time or something like that. We want to go back to trading numbers, not necessarily charts, because there's so much manipulation, HFTs. Now, when I talk about manipulation, I'm not talking about retail traders being manipulated. I'm talking about the market being rigged. It was supposed to be a fair space where anyone from anywhere can come into the market and try to take advantage of a space. But now it's become a space where rich tycoons are actually using crazy amounts of money, crazy amounts of resources to move the market, to print money, to move the value of specific things. Look, I don't care, but I understand it. You know what I'm saying? I understand. I don't really want to explain it because it's like, who cares? We're here to make money. Improvement, maintenance, and victory. All I'm saying is, you should be in a space where you understand that you make the rules, you make the decisions. And trading, it doesn't eventually happen. God is not going to feel sorry for you, regardless of how much work you put in. You have to go in there and say, I make the moves, I make things happen, I'm accountable for everything. And that's success. Now, again, a lot of people mix the two. Ego. I don't want to have ego in the market, but ego is required. It's not ego. It's confidence. Confidence is understanding that you are prepared enough and you're not going to put any limiting beliefs because you are prepared enough to deal with whatever is at hand. Now, ego is this must happen because I'm prepared. Nah, it's not this must happen. It's when this happens because I'm prepared, I'll handle it. You know what I'm saying? So it's a different perspective on its own. And that's why you stop swaying in the way of when you listen to information, you take it as a command, you take it as research now. Like, you know what? I hear what this guy is saying, but fuck this guy. Or fuck that. You know what I'm saying? You have to be honest to yourself. You have to put limits on the things that you learn. That this is enough knowledge for this specific trial. This is enough knowledge for this specific method. You know what I'm saying? Again, straight off from the actual point. Now, number two, you need to learn a risk. There are two types of risks. Risk from a numbers perspective and risk from an abstract perspective. The first risk, I call it SMC2 fractionalization. Now, my concept of smart money concept is how smart you are when it comes to money. In the market, you need to protect your account, but your account needs to progress. So what are elements and systems that are put in place to ensure that happens? Profit taking, stop loss placement, trail stops, break-even focus, and min lot size. This gives you control. This gives you direction. The more you trade, the easier you see, or the better it is for you to see that this is how profit is made without any sort of pressure. Again, these patterns are the same. Oh, you're gonna draw lines and you're gonna make money. Yes. If you understand the parameters of those lines and you understand that how adjustment works based on momentum, the market cannot move without time because structure is related to time. Yes. You know what I'm saying? Yes. Wanna tell me about the apex fish predator strategy and the volume tracks? I don't care about that, bro. I don't care. I know how long I've been trading. I know what I'm trading. I read books. The best mentors are dead. You know what I'm saying? Okay, maybe the market wizards are not dead, but why would I listen to some quant who's my age? Bro, I want to beat you. I ain't here to be friends with you to get your acknowledgement. Yes. I'm the best. Number one. And that's how the mindset should be. You should not be in a space where you do not take responsibility for your work. Be number one. So what is those are progressive routes when it comes to market execution and ensuring that your account is protected and progresses. Everything can be accounted for. You do this until your account stabilizes. That means if your account from zero, my knowledge of the market is that as long as you can place a trade, your account can grow. That's one thing I know. Because even if we once traded an account that went to $8, we've traded with brokers that are just out of this world. You know what I'm saying? You fund $50, $50, your account goes to $8. You grow that to 350. Do you know what 350 can do for you? Get out of here, man. We conducted a project of $300 for 3 months. 70 bands over a span of 3 months. Why? Because we're not trying to leverage. Number one, no one is going to tell us how to trade. The market tells us how to trade. The market is based on context. No one is going to tell us how to utilize the context that we see on our screen. Because that person's not going to be there in 10 years, 20 years time when I come in and mess up this market and collect more funds. You know what I'm saying? Number two is because it was planned. Oh, it was training was put out. You know what I'm saying? It was a team sport. It was a positive space. Attitude was on a high level. Attitude always. Here's the thing. No one what is this? I need to start reading again. I hate reading digital books. I want actual hard copies, you know. So yeah, we didn't diminish the fact that you could blow. We just acknowledge the fact that we can trade. This is the opportunity for us to trade. Obviously, it's like plus six years of preparation. Now it's my 9th year in the market space, probably like 7 years where I actually place trades, where I actually understand, you know what I'm saying, where I actually become a master. Why are you beating other traders up for taking 5 years to learn how to trade, while you went to school for like 7 years? You know what I'm saying? It doesn't make sense. And you spent money to go learn that thing. Most of these traders, they ain't really spending that much. They're utilizing time as a sacrifice, as leverage. And I'm gonna utilize this amount of time to ensure I get to my goal. And then we hear other people that like, you'll never get to your goal. There's no such thing. There's no such thing. If this market is trash, you switch to a different chart. That's what it means. So we didn't diminish the fact that we could blow. We just understood that we need to get to that goal. And as time went on, again, it took me like 2 years because I don't have a mentor, no one is teaching me, to reevaluate that process and creating more material, more resources around it. We found out what were the abstracts. You know, you cannot calculate attitude. So you find out that there's certain things which are systematic that you have to do that, you know, derive or push attitude forward, it was hell. You know what I'm saying? It was hell. So we understood those factors. Now I know, obviously, more money, more resources, and less work, which is the goal. You know what I'm saying? That is the goal. That's always been the goal. You know what I'm saying? Like I said, I didn't care how long it took. I just cared if I can do it. The only thing that I see is, are you a failure or not? You know what I'm saying? That's from my side. From my side. Even though it's harsh, but from my side is, am I a failure or not? And here's the thing, trading losses, they do tend to put you in that zone. Before that, I was in a period of losing for 2 years straight. 2 years straight. I probably lost all my trades. I told a homie of mine, I'm like, bro, I lost all my trades. Like, how is it possible when, you know, we're always performing these things? I'm like, I don't know. The reason I'm losing my trades is because I'm trying to experiment when it comes to a strategy that I can use long term. Now, long term doesn't mean swing trading. It means every time. Now, I didn't understand that I'm actually competing with context, real-time context, and I've always had methods, but I didn't understand how to utilize them. Like, you have a method, but you don't understand there's a counter. This is a W. Just because it's a solid W reversal pattern for your bearish trend doesn't mean the market can carry on going down. That's how a continuation was formed. You are just in it in real time. So you need to just figure out a way to interact with it in real time. No one must give you rules. Even if your stop loss is this small, if you found a way to trade where your stop loss is this small and you are gaining 10 times, take that shit. Eat that shit. Don't be listening to people who don't want to see you win. That Quants who's busy telling you that you can't do this, that person ain't gonna help you win. They ain't. You are helping yourself when you can clearly see this thing is working. If it's working, use that. Then you can utilize my videos just to understand market context and the market truth and market perspectives and all that. You know what I'm saying? My truths, what I believe in. Here's the thing. I recently saw a company, I don't know, called Jane & Jane, but I'm probably gonna do more research on it. They make $5.5 billion a month from trading and only have 3,500 employees. Do you know how much material I have? Do you know what I'm trying to make? If that's possible, I want that shit. You know what I'm saying? I was okay with, like, you know, in my trading career, I just want to make 100 million, you know, in my entire trading career, maybe 30 years, 35 years. But I hear that people are making 5.5 billion a month. What does that mean? Don't care about losses. Care about the entry. You know what I'm saying? The pressure of the entry. You know what I'm saying? How to interact with the market from a direct and counteractive standpoint. I have all that. I just don't have the resources to put them. Again, now we have AI. You don't need that many people. You have enough resources. You put specific people in specific places, and you win. As time goes on, this YouTube channel is gonna be more organized. It's gonna be more great. I'm doing this as a journal for me to carry on finishing this thing that has been dragging my feet. I don't really want to do it. You know, trading gets frustrating. It gets to you. The personas that you embody, it's a lot. But it's direct again. Whenever I start thinking about it, because I'm building a company this side, I don't even want to call it a company. I'll call it a cult. I'm building a cult. You know what I'm saying? That man right there. See that man right there? In Ronaldo, we believe. But yeah, basically, what I'm saying is, this is just a journal to put out there as assistance for me to do what I need to do. Yeah, so that direct risk, there's two types. You learn how to grow your account from a small till a based account. Then you learn how to grow a base account to a target. For example, if the goal is 100K, we have 200 bucks. Here's the thing. In trading, anything is possible. If you have funding, anything is possible. If you can fund 200 per week, I tell you, it can eventually grow to 200 bucks to 100 pence. Especially if you have if you can interact with the market as often as possible. As often as possible. You'll end up trading against your broker. Your broker will start trading against you. So also pay attention to the brokers you use. That's why I recommend XNS as one of the best brokers. You know what I'm saying? Even though it's slow, but it's only slow from a perspective of standard account. Once you move on to a zero account, it's a pretty legit broker. You know what I'm saying? Plus the sponsors that XNS has is pretty legitimate people. Real Madrid, you know what I'm saying? So we won. We won. You can't. Real Madrid don't cheat. They don't buy referees. You know what I'm saying? So XNS is a pretty legit broker. And what is this? IFX. IFX is a good broker. Okay, it's a mid broker because you put out leverage, it cancels out your bonus. That's the broker trading against you. Why when I put on a K, my account says 2K, then when I put on leverage, my account blows at 1K? This is not a prop firm. This is a broker. What are you doing? They're trading against you. So you move on. XNS will let your account go to minus before they let your account blow. Your account will flow on minus and they'll take you to profit. They'll be like, you know what, we feel for you. Like, I'm just saying, I'm not affiliated with XNS. I'll never be affiliated with a broker. I don't move like that. You know what I'm saying? But Exness is the best broker. So yeah, how do you do that? When you grow your account from 0 to 10K, it'll take time. It'll take probably like 2 months of the easiest form of trading, no leverage, taking the smallest trades, smallest losses. I'm talking about someone who did it. My first month was like 4 bends. You know what I'm saying? From 300 to 4 bends on the first month. Not because I can't take sniper entries, I can't take smaller. No, the concept of creating a trading plan is direct situation. What situation do you want this trading plan to trade under? What conditions, perspectives, what are the objectives? And what are realities that happen when it comes to this? You know, that's why I put out from 0 to 10K, because you find out from 0 to 2K, there's no such thing as a consistent stop loss, because trades differ in terms of price. When I say price, trades are sold to you. And then you find, that's why we bid that this trade, this structure is sold to you. Yeah, I hear that guy talking about it's the currency market. No, the trade is sold to you. You bid, buy or sell. And after that, the trade is invalid. You close it and wait for the next best trade. At the end of the day, certain trades pay more than others. Now, the only trick is they don't tell you when the trade has come to an end. But they show you this is where it's most likely to come to an end. But you can choose not to close there. You can choose to close there. You know what I'm saying? You close there because SMC tells you focus on break evens, put your stop loss on structure, take profit, trail your stop, and use the smallest lot size. If you take the smallest lot size, you won't be stressed out about the loss. You'll put the stop loss comfortably. You'll counter trade comfortably. If you put your trailing stop, whether the market comes back and hits your trail stop, you can, one, either enter again, which is why is it possible? Because nothing happens freely in the market. For the broker to come hit your stop loss, your trail stop of plus 1,000% profit, they have to utilize actual structure. And where that structure actually turns to come collect your trail stop, you can take a trade from there, because no one makes the rules besides structure. And if the brokers think they want to take advantage of your trading, you take advantage of structure. Now, the thing that bores me is that, again, in the future, the market is going to be based on numbers again, because there's just people who are trying to rig the market, trying to remove those truths that make the market fair. You know, remove those truths that make the market what it is. As much as the market is difficult, it's fair. It's fair because once you have enough knowledge, you understand it. There's no point of perfection. It's literally just taking advantage of anything that presents some sort of safety and progress. There's a stop loss on top. If they come hit your trail stop, there's a possibility the market keeps on going down for the rest of the day, because it's 50-50. If they hit your trail stop and come back up, they have to utilize a form of structure that gives off that result of 50-50 again. From minute one, not even from minute one, from that 15-second chart to the Milky Way galaxy chart. I don't care. You know what I'm saying? How much time is used on that particular time frame. Everything is 50-50. Everything can be traded. Everything can be taken advantage of until these motherfuckers ruin the market, which they will, because they want to find out that whatever they're trying to do is not real. People want to actually learn how to trade, and people want to actually make money. And yeah, they're just going to ruin the market. And the funny thing is, they don't understand that the market is based on risk tolerance. You know, as much as I know the context, can I tolerate the risk that I'm putting out on the table? Can I consistently fund? If I can't do that, as much as I'm a skilled trader, you know, I'll miss out on a lot. And there's a lot of traders that are in that bracket. They think they're bad traders, they think they're losers, but they don't understand that it's your funding interval. You know what to do, you know how to do it. You just fund too late, too little. And when you interact with the market, has been waiting to take you out. Because the brokers also do see what you trade. They do. I mean, they wouldn't know where to put your order if they didn't. But they even assign an account manager specifically for you. But are they the ones ruining the market? No. They're not the ones running the market. These so-called quant traders, which is not, they think they're the actual company, are the ones running this thing. They're gonna ruin it with their fake ass technology, which is not good for the market space. They're gonna ruin it with this thing of printing money, which is not good for the market space. Economy should be fair. If your country is better than my country, I should be doing better, and that's based on people. So again, it's some bullshit. It's some bullshit. AI will be great trading based on you know what, even the AI thing, it's great, you know what I'm saying? It's great, but it's also bullshit. It's also bullshit. All I'm saying is, why in an era where all the traders who feel like they've been done bad, it's been moving slow, it hasn't been happening, are about to chew up the market, and after a few years after that, they're gonna crash the market again, drop it, break it, because everyone actually knows what they're doing. Everyone knows what they're doing right now in this era. It's normal, a thing of entering the market to, you know, try our luck. There is no luck. Every trader that's gonna make it in this era is because it's gonna switch on in their head, and they don't understand it's not luck. It's time. You're just in conflict with the change, which is you are the required trader. Then yeah, you utilize SMCs from your 0 to 10,000. The reason 10,000 is because the second point of direct risk, calculated risk, is fractionalization per trade because of how well you've been trading. The reason you use small lot sizes, stops, trail stops, profit taking, break evens, is because you are getting used to trading the market. You are getting used to understanding how to win. Once you get your account to 10K, which is gonna be a challenge because you're a novice, now you have an understanding of how money is made. You can afford to risk 1K per trade. You can now fractionalize your account. You cannot fractionalize anything lower than that because it's a bit too much. But there's a big but. Not even a big but. It's going to be explained in the second point, which is number 2, abstract risk. What do I mean by abstract risk? This is the point of whether you have 0 or 10K. Risk is based on what you think. The trade has a price, but you have what you think. You know what? I love this trade. It's a W. I have 10K. I'm going to put up 9K on this trade. Whether I lose that 9K, I'm okay. Whether I make something, that's what I'm gunning for. 9K is a big risk. You're obviously not going to get a return of 9K. You're going to get probably 40K, 30K. That's how trading works. More than what you put in. You're not going to get a million, you know what I'm saying? Because market is based on compound results again, unless you have shit ton of money and you can, and you have heavy balls, like, you know what, I'm gonna put up 100 million. It's bad trading, you know what I'm saying? Bad trading. So you put up that 9K, you profit 45,000. Now your account is at 55,000. Going forward, you can put up 2,000 per trade until you find another trade that looks like that and assume confluence, and that's how you grow. In a space of 25 trades, your account has moved from 10K to 400K. That's how the market, that's the market I know. That's the market I used to trade. We used to trade. That's the market we planned our goals and dreams on before it sent us to, you know, the route of development, the route of mastery. I call that. Mastery is practice, fluency, and success. You know what I'm saying? Success. You force the result. In trading, you force the result. It's a mindset. You need to understand that. In trading, regardless of what happens, I'm not egotistical. I can deal with whatever happens, but I will force the result. That doesn't mean you force structure. You understand the context, but you try to make sure that your account does not decline, does not regress, move forward. So yeah, this was supposed to be a video, 10-minute video. I'm gonna set it out as a live chat, a live trading chat, talking to the novice how to improve and what to improve. So abstract risk is based on, it's usually based on skilled traders or funded traders, or both skill and funded trader. And usually you can get there by yourself in the market. The market is a space of opportunity. You fund whatever you fund, as long as you can take a trade on your broker, you can grow that to a stable account, and you can start treating that like a funded account. Take risk, take risk. Trading is about risk. Don't forget that. You are in a space where you can lose all your money. Why not go all in? Why not trust yourself enough to say, you know what, I'm already going to lose my money. Now, I'm not saying be reckless. Again, these videos are going to be more structured. Besides more structured, the material in here is when I teach you how to construct yourself. Because this is a journal for me to construct myself, to understand what is necessary, what's not necessary, what's trash, what's not trash, what makes money, what doesn't. The motto is improvement, maintenance, and victory. That's the art of war. You know what I'm saying? The art of the warrior, the art of the king, royal. That's just how you need to take it. So yeah, as a novice, build your skill, which is understand market context for what it is. So study what market context is and the reactions, the possible reactions of every market context. Then minimize it to a strategy, method that you can use to find entries. And then understand risk, which is, the risk is based on numbers and based on abstract. Numbers risk has to have terms that move your account forward, but you need to understand from 0 to 10K, you can't really have a consistent stop loss. From 10K going forward, you can have a consistent stop loss. Then we have abstract risk. This is based on skill and funding. If you can consistently fund, and if you are very skilled, the funding doesn't have to be large, it just have to be consistent. You just have to be very skilled, and then you can withdraw as you wish. The only thing I feel like is burden onto me is time. You know what I'm saying? Time. I just feel like I just don't have enough time in a day. I wish like the day was 30 hours long. I wish the week was like 10 days long. So time is what I don't have. So yeah, we're aiming for that 5.5 billion eventually in the future per month. We're not about to come trade and waste almost a decade learning how to trade to come take the dust. I want it all. You know what I'm saying? For me. Now I teach how to be content. Again, I'm not wanting it all because I want it all. You know, there's positivity you can do, you know, save the hood. I mean, all I'm saying is that's what I want. If that's attainable, why not? You only live once. And the trading industry has been shitting on us retail traders for years, so why not? You wanna try that until they do what I said. And there's gonna be a lot of court orders because of this. All these idiots from fucking Wall Street, they think they know what they're doing. And they're also gonna see the same thing, that these rats that call themselves the protectors of the market, the regulators of the market, are gonna ruin the markets. And it's not because of AI. It's because they're just trying to restructure structure. And when I say restructure structure, is they're trying to remove the idea of it 50-50. Understand? I understand spikes are normal structures. I don't take spike as a manipulation or anything. It's part of the market. It has been on the chart for years. It hasn't repainted, so I take it as structure. But they're trying to create a market that is, the liquidity doesn't make sense. Let me just say that. If you look at fixed pegged markets, whatever they call them, I know we're trading floating markets, free market. You check those other markets. I know those are ran by, you know, their countries. The country decided to run its own economy and all that, which is understandable. And that's why they put them as exotic. But I'm telling you, normal pairs are going to be exotic because these rats don't know how to keep their hands together and just let the world be. If someone's better than you, someone's better than you. That's what it is. Stop trying to force context that doesn't exist. And no, it's not going to be a positive change. The market's going to be untradeable. It's going to go back to the point of only the rich can trade, because liquidity will not allow you to trade with a small account. These brokers are going to switch on us. You know what I'm saying? So it is what it is. It is what it is. I don't know. Maybe I'm going crazy, but I can read the charts. You know what I'm saying? The charts. Here's the thing. If something as stupid as the charts, you know what I'm saying, can tell you the future of a country is outcome, economic outcome, how can you not know it's rigged? How can you not say it's rigged? You know what I'm saying? And South Africa has been doing great for years. Ever since I've been here, ever since I've been born, we've been doing great for years. But somehow the economy is just, how? There's so much money being regulated in the host that's moving around, circulating. So much money moving in town. How is our... It's all some rigged bullshit. You know what I'm saying? Prices are this high. Why? Because these rats, again, they're trying to ruin the market. And this type of inflation, this type of economic construction and economic degeneracy is going to ruin the market entirely, the global market. And these fools that wear suits are going to be out of jobs, and they won't understand, oh, it's price. No, it's not price. It's not fucking price. We know price. We trade price. You know what I'm saying? I don't know. Why did I ramble this much about whatever? So yeah, setting out dates and targets as a novice is unnecessary, because you need to realize the market is not capped to a time limit. You know what I'm saying? Signals change. That means the best signals will eventually appear. You need to give them time to appear to you. And once they do appear to you, you execute them. Another saying is that you experience what you want in the market. If you want to experience the market in a competitive manner, you experience it in a competitive manner. If you want to experience it in a direct manner, you only get direct trades. And everything has a pros and cons. Waiting, losing, difference. Same thing, difference. You know what I'm saying? So yeah, do not put out any time constraints. The market will teach you what you are capable of doing. The more you can understand what you are doing, the more direction you'll have. Trading is a long-term journey. I'm not gonna lie to you. Shout out to these quants coming onto the space, because they make everyone else who's been hating on retail traders realize how much work, effort, dedication, discipline is required to actually become a successful trader. Now, to the retail traders, don't be thinking that now you have to go do quant and math and all that, because you don't. Finance is abstract, and finance can be direct. You know what I'm saying? Direct, abstract to a point where you have to situation, psychology, financial position, and all that all play a role in your trading. Because the market is 365, but your attention is not, your money is not. So that's the difference between whatever. You know what I'm saying? Yeah, do not beat yourself up. Be proud of yourself. We're in the era of the floodgates. The floodgates for all retail traders are about to open, or should I say they're already open. From now, going into the next 3, 5, 6, 7 years, the amount of retail traders around the world, not because they're scammers, because they've put in the effort, is going to be crazy. And that is going to cause the market to collapse, because these people can't have it in their head that people actually gained the skill and don't understand from a perspective of technicals or fundamentals, but understand it from a direct perspective for what it is, which is how to make money, how to make blueprints, how to understand situation, how to understand context, and how to utilize it the best way I know how for my advantage consistently. And that I don't want to say the economy is rigged or what. Economy is rigged, not life entirely, but the economy is rigged because why are things this expensive? Like, why is a shirt this expensive? It's too expensive. That's what I'm saying. These things are just way too expensive. Inflation is crazy for the development that has happened. No one has created a new type of plane, but here inflation is going out of line. No one has created new forms of fuel systems, but here prices going up. No one has created better forms of education, still using the same medication as 50 years ago, but here prices going up. What is going on? What are we living in? Are we living in some rock or something? You know what I'm saying? And people are not saying, hey, it's supposed to rise because the number of people. If there are better people, the economy wouldn't be rising like this. And better people means give people skills, give people access. Make these people build their access. That's it. They're the ones who's going to enjoy it at the end of the day. So yeah, in trading, to the experienced trader, the one who knows that they're about to break through even though they feel like it's not, trust me, it is. These quant traders didn't appear for nothing to prove to you that it takes so much skill, time, effort, calculation, discipline, focus. Like you need to be sharp. You know what I'm saying? And sharpness comes down to you are prepared enough for whatever happens, and you acknowledge yourself as the difference maker. That's it. I'm prepared enough, but I'm also responsible for everything. Every trader wins from there. The only thing is that you just don't have the funding that you want. So you have to utilize your situation the way you know how. I know all of this because I utilize my situation to create trading strategies and stuff like that. Did I want to trade small accounts? No. It's like in fucking Brazil. If you sell an NVIDIA chip card for like 32 bands, there's gonna be a kid in Brazil who builds that shit off of fucking Intel chips and sells it to his fucking hood for $300. Do you know what I'm saying? You force people to create. You know what I'm saying? You know, struggle forces you to create, or should I say, failure, being cornered. You know what I'm saying? It forces you to create what you need to create, especially if you want a specific result. Obviously, that kid is not going to create an NVIDIA chip if that kid is not into PCs. That kid doesn't want a particular outcome. There's crazy things that happen out there. There's crazy things. And those people don't really go out there to find fame. They just wanted the outcome of that which they wanted to experience. Like me. The outcome I want to experience in trading is absolute cash, floodgates, billions, with a B, and not from some Zionist type organization or some company is going to give me cash. That market is there. I want to take advantage of it. And it means I'm going to learn whatever, I'm going to do whatever it takes to put myself in that position, which is understand everything that is required for me to understand about the art. If someone presents new information to me about the market, I'm not going to listen to it. It doesn't help me with anything. I'm only going to listen to what I'm doing research on. If my brain tells me that, you know what, you are seeing the market incorrectly, you are perceiving it in a specific style, or you're perceiving it like someone else, then I'll tell myself, okay, you need to switch up, you need to change. Purely responsible for that. You know what I'm saying? It should be like that. And it was not always like that. I know context again. You might be in a situation where it's like, I don't know. I feel like I don't know enough. Then go in there and find out what you need to know. That's what you need to understand. Go in there and find out. If the person you are listening to does not say the market is 50-50, then you are listening to the wrong person. But if they tell you that it's 50-50, that 50-50 makes you understand at any given point you can trade. Like you can trade right now even if your strategy is not working, because the market will create context. That context is based on the calculation of the tick framework. Think about the first candle ever. Whether it's bullish or bearish, the next candle formed because of time. You know what I'm saying? We didn't know the size, but we know for a certainty it's going to be bullish and bearish, and the size doesn't matter, because once that candle concludes, structure is given, and from that point on, you can utilize mechanical points from the first candle ever, just like that. You don't need to put out a line, find key zones, find FSGs. Nah. If the market opened today, I would be able to trade it today, because I just understand context and the result of how context is going to be like. And the best thing about the market is that we have multiple time frames. So even if these rats try to mess up the market structure in the next few years, we still have what we call confirmation biases. We still have what we call time frame reflections. This time frame cannot move without affecting the next time frame. So in order to mess up the market, then when I have to mess up economy, and then when I have to mess up structure, new forms of structure I want to start existing. When I say new forms, here's the thing: we cannot have spikes from the M1 until the monthly at the same time. We cannot have that. It's impossible. Why is it happening? The market is now changed from a free floating market to something that it shouldn't be. You know what I'm saying? Liquidity is now arranged within itself. Like, you know what? We think we should. I don't know. Maybe I'm talking smack or crazy, but it is what it is. I'm the best, so I know what I'm talking about. Here's the thing: the next few years is gonna be a blast. You know what I'm saying? I'm probably gonna disappear because I don't like attention. I don't like attention. I'm just here to share the knowledge, share the experience, and how to break through this shell. Because that's always been my goal, to have a trading armada, or that breed positivity in the world by, building infrastructure, developing skills, developing the mind, actual things that actually move humanity forward, experimenting on new things and all that. None of this positivity nonsense. So, yeah, live chat, newbie, novice, future of trading, and they're trying to take down the economy, and we should tax billionaires more because they don't even understand the market, but they're throwing money in it. Respect the game. You can't tell Messi how to take a free kick. You can't. You know what I'm saying? So respect the game. There are certain realities that should just stay constant, which is if you're of merit, you should be respected. That's it. If you're not of merit, you know what I'm saying, you shouldn't be respected. Now, merit doesn't mean certification. It means capability. You know what I'm saying? Pure capability. Pure capability. So in the market, pure capability. Excuse me. The only reason you don't see that is because you're funding interval and people are telling you how to trade. If you have multiple strategies, get a book. I say this. Have journals, not one journal. Journals. One psychology, one strategy, one attempt, one research, purely research, financial research, social research. There's no economy without social. There's no social without economy. We live in that era. You cannot separate the two. We're not in the era where we love each other. You know what I'm saying? We cannot have societies where economy does not exist. I hear people saying we need to be a society. We're not in that era. That's probably like 1,000 years from now. You know what I'm saying? There's certain races that are still discovering themselves, certain cultures, you know what I'm saying? So we're still far from that lovey-dovey thing where we're all one thing. We're not all one thing, you know what I'm saying? But we can help each other accumulate or attain one goal. And, we can push that narrative. At least it must start somewhere, but everything has its own time. We're in the era of bands, era of creation, you know what I'm saying? Era of I don't want to say innovation, but advancement. You know what I'm saying? We have people like Ronaldo's who've broken certain human norms. You know what I'm saying? Things that are creating new realities move in a specific way till the age of 50, 60, certainly. You know, we're in that era of certainties. So yeah, this is an hour long. I know these live trading chats are the ones that are gonna bang the most because they have the most information and they have good stories and good perspectives. Again, this is based on my perspectives, my knowledge. They don't have to be the truth. They're not the truth. They're true for me. So yeah.